When dealing with taxes, not just in Italy, but in every country, every single word in the law can have different implications. Words like may, must, can, or cannot seem simple, but they hold significant legal weight, often creating vastly different tax outcomes. And for expats living in Italy, understanding these words can mean the difference between paying the right amount, the right tax amount, or facing unexpected penalties. So let's face, for example, the may versus the must in deductions. In Italian tax law, specific deductions are described using the term may, indicating they're optional and subject to conditions, while others use most, implying a mandatory application. Let's say Maria, okay, very Italian name. She's an expat, she lives in Milan, and she incurred in significant healthcare expenses in the last year. Like many of you, she read online that such expenses are deductible. And the line that she referred to stated, taxpayers may deduct healthcare expenses exceeding a certain threshold. So she assumed that may has an automatic right and failed to read the conditions. So later on, when filing her taxes, she realized that the deduction applied only to expenses supported by invoices, not receipts. She has to show the payment receipt and invoice too. And the expenses had to exceed, the minimum threshold around 130 euros annually to qualify. By misunderstanding the word may, she lost out a potential deduction. And if the law had used must, it would signal a mandatory deduction for qualifying expenses, leaving less room to maneuver for an error. Let's say can or cannot in remote work income. Expats working remotely often gamble with the taxation of foreign income. In the Italian tax law, in our domestic rules, distinctions such as can versus cannot determine whether such an income qualifies for exemptions under certain treaties. Let's say you're John, okay, a software developer, and you work remotely for a US-based company while living in Italy and residing in Italy as tax resident. And he reads a tax treaty somewhere between Italy and US that states income from employment can be exempt from taxation in Italy if the employment is performed exclusively for a non-Italian employer and taxes are paid in the US. So can be. She or he, in this case, assumes and thinks that this can is a blanket rule, believing his income is automatically exempt. However, his employment conditions do not satisfy the treaty's residency, are exclusively clauses, so consequently, he receives a pretty heavy tax bill from the Italian authorities for failing to declare his income correctly. Had the law used cannot, indicating circumstances where income cannot be exempt, then John might have investigated further and avoided costly mistakes. What is the importance of shall in filing deadlines? The word shall in legal context implies a very strict requirement, often linked to penalties if unfilled. For example, a lady, a British expat, rents out an Italian property for tourists during the summer, Airbnb, Booking.com. According to the Italian law, rental income shall be reported quarterly if subject to the VAT, to the IVA. So this lady assumed reporting was optional because her rental income was modest, was lower than a certain threshold that she read online. So when audited, she faced penalties for failing to comply with a mandatory requirement. A clear understanding of the word shall could have prevented the oversight. What's the difference between exempt and excluded in tax-free income? Words like exempt and excluded carry very different meanings in the tax laws. Let's say you're a Canadian consultant living in Venice. No one picks Verona, so let's pick Venice. And you learn that certain types of foreign income are tax-free in income. And the statement that you see and that you read is foreign pensions are exempt from taxation in Italy under specific conditions. So you assume that all your foreign pension is exempt. However, the term exempt means that the income is initially taxable, but later relieved through deductions. So if the law had stated excluded, it would mean income is entirely outside the scope of taxation, definitely outside of the scope of the tax reporting. So this misunderstanding could lead to an underpayment, so fines during a tax audit. What's the difference between eligible and qualified for tax benefits? If you are, let's say, an American entrepreneur, you move to Genova, okay, under the regime forfettario, the simplified tax regime with the 5% for the first 5 years and so on. And you read, self-employed individuals are eligible for the regime if they meet specific criteria, less than 85,000, and so on. So guessing and reading this mean and the word eligible in terms of meaning automatically inclusion, it's very risky. So after submitting your tax return, the Agenzia delle Entrate can reject your application because you failed to meet the qualifying income threshold, maybe making more than 100,000. So had the law used qualified instead of eligible, you may have realized that additional requirements needed verification. So what's the takeaway here? A lot of people think that, reading is very simple. There is a pretty huge difference between reading laws, applying international treaties, and reading a story online. Words matter, especially the tax laws. Experts in Italy must pay very close attention in terms like may and must, as indicates whether actions are optional or required by the law. Can versus cannot highlights possibilities or restrictions. Shall, mandatory compliance. Exempt or excluded, the treatment of income within the tax system. Eligible or qualified, in terms of, for example, conditions for tax benefits. How to solve that? Well, if you can, always speak with a real tax professional. A tax advisor can clarify legal consequences and how to ensure compliance. Not only, familiar with English if you want, but mainly with how those words apply in real life case scenarios. What is the practice and how the Agenzia can handle any kind of objection against you. You have to carefully check and understand the conditions attached to the tax provisions. And remember, stay updated, especially in Italy. Tax laws keep on evolving, so ensure your understanding is correct and up to date. And the last one is the one that I truly love. Ask questions. When in doubt, seek expert advice to avoid mistakes. In the world of taxes, a single word can change everything, can carry the weight of thousands of euros, hundreds of thousands of euros. By recognizing the power of language, experts can better navigate not just the Italian tax system, but the worldwide tax system, minimizing risk and maximizing opportunities. Know the rules first. And yes, an average, if you want professional, can give you average advice. So what happens if he picks the wrong word?